Ladies and gentlemen, welcome back to the channel. We're going to go over everything you need to know about AMC Stock here in the markets today. Hit the like button, subscribe to the channel, and let's get started. So, two major catalysts that we have already had for this week out of three. There was three major catalysts. Two of them are already over. You had Nvidia's CEO at the GTC conference. Let me tell you, an absolute nothing burger as far as the stock itself. You were actually pricing in a lot more excitement from this event than what you actually got. That's why Nvidia is down about 1%. At one point today, you were down about 3%. Most of the day, you were down about 2%. We'll see what happens. I think this is the market maker's last-ditch effort to squeeze the bears, squeeze the bulls, screw everyone before the Fed tomorrow. And that's exactly what I think is happening today. Now, really, the disappointment from Nvidia's GTC conference comes maybe in the pricing of the GPUs. The next generation Blackwell chips, apparently they're only going to be $40,000 to $50,000, or $30,000 to $50,000. $30,000 to $40,000. A lot of people were expecting them to be $50,000, $60,000, $70,000. So that was a little bit of a disappointment. Likely means could see some lower margins, maybe lower volumes of selling on these chips. So I think that's interesting. Nvidia also came out with this NIM platform that is apparently going to help companies enable AI into their companies. We didn't get a lot of information on that. We kind of just got the rundown of what the program is, but we didn't get like too many use cases. We just didn't get much clarity, pricing, none of that, just nothing. Okay. So from that perspective, as far as adding fundamental value to Nvidia, the conference did not do a lot of that. You did get, a decent amount of hype around different things, fully autonomous cars, robots, things of that nature, but it just didn't add much to the actual fundamental case for Nvidia. If anything, it kind of, the chips were a little underpriced compared to Wall Street's expectations. So that's definitely why you did see Nvidia selling off today. We'll see where things hash out by the end of the day today. I think the day before Powell can always be a very volatile one. Nonetheless, if you take a look at the NASDAQ today, the NASDAQ is the only index that is red. And as long as we don't see some kind of face ripper rally here into the end of the day today, you have now broken down under this trend line as support yet again. That's not exactly a great position to be in heading into Powell. It looks like you're more likely to fall from here than to rise just purely on a technical basis. Now, who knows if that's ultimately going to happen? Who knows? Anything can happen. Maybe Powell comes out and he's super freaking dovish and wants to start cutting rates soon. That's always a possibility. But I think the more logical base case assumption is Powell's going to come out and he's going to say the same old what he typically says, but he's going to make it very clear that they will raise rates again if they need to. And I think that's the part that could give you larger downside in the markets. And I think on a technical basis, you got to start opening yourself up for a larger correction event now that we're no longer in a super bullish channel. You've started to curl down. The trend is downwards. Do we get a gap down? Do we get a large move down? I think that's truly the better question to be asking ourselves at this point in time, and what seems more logical from the Fed and what is actually priced in. Now, I'll tell you right now, I think on the dot plot, the Fed is going to forecast one rate cut in 2024. This would be going back to essentially the last summary of economic projections, not in December, but in September. If you take a look at this page here, this is the summary of economic projections we got in December. And the September summary of economic projections for 2024 was pricing in a Fed funds rate at 5.1 by the end of 2024. So if Fed funds rates are 5.25 to 5.5, to be at 5.1, that would imply roughly one rate cut. So, we'll talk about this more in the next video, but I do think that is a risk that you need to know. Currently, markets are pricing in, let's see, 1, 2, 3 rate cuts in 2024. There's only a 1.4% chance of a pause this year. No rate cuts, no hikes, nothing. And there's a 0% chance of seeing a hike. So, I think that becomes problematic if the Fed starts talking about potentially hiking rates if inflation does continue to rise. I don't think we're at that point. 2 months of inflation data in 2024. It's probably not going to be enough to change the Fed's stance that aggressively to talking about, cuts to going back to hikes. But you got to consider that aspect, that prospect that the Fed may need to raise rates again. I think they want to prepare the markets for that at the bare minimum, no matter if they do, raise rates again in the future or not. I think you got to prepare the markets for it. Now let's take a look at AMC stock here on Ortex, and you can see the short interest is rocketing higher yet again to 13.26%, the highest we have been at in a long time now. 3 months, highest we've been at. 6 months. Yep, this is the highest we've been at in 6 months as well. So the short interest continues to rise. I think you guys likely understand, alongside myself, that most of us think the short interest is like hundreds of percents, right? Now, this number rising on Ortex, I don't care that it's rising. I don't care at all. Makes no difference to me. But people that are looking at AMC, potentially looking to make a trade in AMC, they're going to look at this short interest number, and that is what they're going to essentially trade off of if they're looking at potentially making a trade, right? Now, you do have $152.69 million currently in short positions in AMC, with a days to cover of 2.3. 34.78 million shares that are currently sold short, with shares out on loan of 46.82 million. Cost to borrow 1.08%, utilization of 63.1%, and a short score of 67.97 out of 100. So the rest of the data is not really moving around all too much. You do have cost to borrow fees at about 3%, which is pretty similar to what we have seen recently. That's a pretty standard cost to borrow fee, really across the board, about 3% or so. So there is all of that. And again, the Bank of Japan, they raised rates 0.1%, exactly what was priced in, exactly what was expected. So that really didn't cause too much of an effect across the board. You can see, let's see, TLT was up 0.22%, or at least is at the time of recording this video. So a little bit of a breather on yields today, and the dollar is up about 15 basis points or so, which the dollar being up, not great. So you're actually seeing a bigger reaction in the currency market, not as much in the bond market. And remember, the fear was if Japan starts to raise rates, maybe some of that money starts to leave U.S. Treasury markets and go into Japanese markets, which would put selling pressure on TLT, which could raise yield. So this could have been a very large event. It could have been a very small event. I would say it was like a medium event. You had the dollar reacting. Bonds did not react negatively, but they also didn't move big as well. I think everyone's kind of waiting for Powell tomorrow, and we'll talk about that more in the next video. Now, specifically, again, with AMC stock, you're sitting right there at that 50-day moving average. The real question is, do we break above that and start to go on a larger run, or do we break down and start to go into a crash? I think, again, Powell is really going to dictate what direction this stock chooses to go. Now, if we actually take a look at the sentiment today for AMC, it's actually a little bit better today than it was yesterday. Today's sentiment is bullish at 58. Yesterday, it was at 50, which was categorized as neutral. Message volume is higher as well today. Yesterday was at 43, today is at 49, and the participation ratio is at 55 today, which is broadly in line with kind of where it has been recently. So actually some pretty good numbers today, considering AMC stock is down 2.28%. The percent of stocks above their 50-day moving average today is up 1.25%. Again, when the Russell is green, you tend to see this go up, tend to do better. And again, you peaked out on December 28th when you were pricing in 7 rate cuts. Now you're only pricing in like 2.8 rate cuts or something in 2024. I think that's what makes potentially tomorrow that much more volatile. We get a summary of economic projections from the Fed. And again, the Fed has to kind of open up the markets to the idea of raising rates if inflation continues to come in hot for the next couple of months. I think the Fed was way too late to actually start raising rates. So I don't think the Fed wants to be too soon or, too late or too soon in declaring victory on inflation. They want to keep the optionality open. In the last couple of months, they've done pretty much the opposite of that. They've basically said over and over again, the next move is likely a cut when the data that we're getting just really doesn't support that. So I think that's an interesting scenario heading into tomorrow, and it's going to have big implications for the broad market. So I hope you guys are ready. Now, Stocko tracker data here on the day today. Let's go ahead and refresh this. Make sure we have the most up-to-date numbers. Come on, Stocko tracker. Come on, Stocko tracker. What are you doing? What are you doing? Refresh. It's crazy. It takes forever sometimes. So a little bit more option activity. You do have about 2,400 calls that are currently in the money, 40,000 calls that are out of the money for this Friday's expiration, puts in the money at about 6,500 and puts out the money at about 15,000. So over 2 times as many calls for this week's expiration than puts, and that is definitely a good thing. I mean, can't complain with that, I guess. But it doesn't necessarily mean AMC stock is going to do exceptionally well this week. Like we've seen just even last week, there was 2 times as many calls than puts. AMC stock did not a whole lot. I mean, it just kind of traded right up against that 50-day moving average, kept bouncing off of that as a resistance point. Now, tomorrow pre-market, you will have General Mills and Jinko reporting earnings, as well as Ollie's. Tomorrow and after hours, Micron, Chewy, KB Homes, Five Below, and Guess. Micron could be important. Semiconductor company. Definitely want to be watching that one. Thursday pre-market, Intuitive Machines and Darden report earnings pre-market. And then Nike, Lululemon, and FedEx that report Thursday in after hours. And those are more of your consumer names. And I think everyone's kind of wondering, how is the consumer doing right now? I mean, McDonald's CFO just came out and said people are cutting back on their McDonald's purchases, right? The traffic is slowing down. That's probably a problem if McDonald's traffic's slowing down. But then again, people used to eat at McDonald's because it was cheap, and it's pretty comparable now to other options. So maybe that makes sense just in general. I mean, it's not your first choice to go to McDonald's, right? Let's just be honest there. So that's your earnings lineup for this week. Not too much that's actually left for this earnings season, but it seems like every week nowadays is an earnings week. And there's at least a couple companies that are noteworthy, which is a little strange. You would think Q4 earnings would be done by March 19th, but I guess not. And then pretty soon here, we're going to be getting banks again and then start a whole new round of earnings. So there is that. That's kind of what I have for you in that regard. AMC stock, if you look at the RSI, is at 44.21, which is slightly under neutral, so you're kind of still bearish, but pretty close to being neutral overall. The MACD is really not doing a whole lot of anything. The lines keep crossing over each other. Overall, you're still higher than where you were previously, so that's great, but it's not really telling you a whole lot at this point. Again, the only thing we need to see is whether we break above the 50-day moving average, or if tomorrow Fed Jerome Powell hawks down in the markets and AMC stock, gets beaten down. That's kind of my expectation. AMC stock can rip tomorrow or get absolutely pummeled. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.